Hey, good morning, my neighbors. Welcome to another episode of BYTTT. What it do, Rod? Good morning. Got a couple of things I want to cover. Unfortunately, it's going to be a live one. I know I usually do my edits and all that good stuff, but a couple of things had stood out, and I want to kind of see the jobs report after making another move to the upside. We might be able to scalp some fun stuff on this trade here. So, without further ado, let's go ahead and get into the chart. So NQ, after our Asian session enjoyment, kind of continued to that upside. We got into this candle. This was a massive sell-off that happened at the end of the month. I think they're trying to target up here and aim for new highs. I think they built a solid base to try to take a stab at it. But we got to see what this jobs report has for us. So if we look at this chart, you can kind of see we came off of that stranger danger going through. We tried to be bearish, but it didn't really last too long. Let's get rid of that bad boy. And then we just kind of like cascaded through a whole bunch of levels. This was some of the levels that we enjoyed over yesterday that I didn't get to show y'all on Get Rich If You're Trying. So where do we go here? Well, the first thing is I think a lot of people during the overnight session is going to start taking some of their profits. There is a little bit of a paranoia for those that plays during the Asian session that they don't want to carry it into New York. It's just for protecting their profits and everything else. So let's go ahead and get deep into it. In 30 minutes, we're going to get the jobless claim, which I'm going to break down in the news. So just bear with me when we get there. But you can kind of see nice little spike. They're trying to hold that 600 level. Let's go ahead and mark that off. And we're just struggling. We struggle to get to it. Lots of sell off here. And this one right here. So, hold on. I got a good friend of mine. He's debating what I'm supposed to be looking at. And yes. Okay. I hear you, but I'm talking about. Okay, okay. Let me just respond to this. Yes, below. So it is starting to discount. So if you notice, I pulled up my screener here. I have a couple settings. If y'all want to go ahead and imitate it, that's cool. I look at free cash flow. Price to free cash flow, I have it at 20. Revenue, TTM, EDBA, the like over 25. So he's gonna have a nice. Oh, and then I have a trailing 12 months on that one too, and above volume here. So that's how I kind of get some of my items. This is one of 5 screeners that I run, and he's debating me on Lulu, which I don't relatively see it, and it's starting to be discounted, right? And that's cool, right? I don't mind it being discounted, but let's I think I got my thing set to Spanish. Discounted. It's starting to be good. So jeez. So yeah, and let's get back to what we're doing. So if we look at this, we got a nice sell-off that was happening here. They built a base here, trying to use the VWAP. Unfortunately, the VWAP is a little far away. They might try to retest it, especially with the Stoke being so high. But this is our daily. Can we get a little bit of a follow through, especially from here? And this is our weekly, and this is the conflict. We had a massive drop off because the week was tired. So there's a lot of things that I'm curious about, and I think this jobs report is going to go ahead and point it out for us. So that said, let's go ahead and run through the rest of the tickers. Follow up our BYTTT completely. like I said, this level was going to be like 64, 63. We kind of went to 63, 64. And you can kind of see we built a base and we just pushed right back up. And that was the target. If we look over at the daily, you can see very, very tough order blocks all throughout here. This was not going to be a full-on dump. But if they're going to go ahead and try to take this out, they would have to come back and pull back. And that's exactly what they did. Can they get all of this sell side liquidity, and that could be enough momentum to get us into $72? Very possible. But again, we're going into the slower season for oil, so that might not be the case. Here is the British pound. Look at that. Oh my God. Rod, please tell me you played the British pound. Please tell me that you played this bad boy. Look at that. And gold was more tempting when we were doing our trade during the Asian session, and I wanted to go ahead and pull the trigger on that. I did not, because I love my NQ, and we did exactly what I was expecting for NQ. 328 ticks on gold. If you didn't catch my Asian session, I'm gonna see if I put a link inside of there of this video so that way I could see it. But we really played this whole entire Asian session breakout because the momentum was on our side. Here's silver. Silver is starting to do, again, I was looking for it to bounce somewhere around here. We didn't get that, but we're getting a little bit of a move to this upside. Could this be the one that actually pushes us, using this fair value gap as a structure for it to stay up? Let's look at the daily. This is what the daily looks like. Nice little order block. If we could get a close above this level, we could get a solid continuation into 40. British pound. This is the reason why we're getting driven back up. Still, we are not out of the woods yet. So if we're going to get support out of the British pound, we're going to need this bad boy to break through and just follow through, taking out all the British pound bears and start to make a nice little push to the upside, which will drag the NQ and ES up, and all the equities, I should say, probably even Russell. Here's Bitcoin. And I told y'all that 112, that was that area we kind of touched back on. Sorry, the kids call me. And if we get ourselves a nice little break of this downward trend, this will give some nice pressure to get back to 120. I won't say we'll get back to 125. Now that is a target I'm looking for, but right now it's a good sign because this is that trend line I kind of was telling y'all about, all the way back here, and we're holding really firm there. All right, and then the next one is the Russell, and you can kind of see that the Russell is doing its job. I was looking for it. Hold on, let me put my iPad on charge. About to kill my iPad. You can see right here with the Russell, it's giving that whole entire bumper run move, and we're starting to fill all the way through. If we could get more out of this, maybe get into that 22.75, 22.81, that will be a solid move. Look for the Russell to just continue to this upside as we fill the in between here. Okay, last one is the US dollar. That is not the US dollar. I guess I was going through charts. Let's go ahead and fix that. Dixie. All right, look at that. We are still dropping. This is the infamous dollar. Oop, get out of that. This is the infamous dollar, and you can kind of see a nice little break below, and it's trying to get out of there, and it's struggling to do so. Let's see what happens. To be honest, I might have to edit that. It is early in the morning, and I barely got any sleep. But yeah, we could really get a nice, which annoys the crap out of me because I was right at the edge of London session. I woke up, but as I was waiting for London session to start, I was too dead tired. I just went to bed. I could have got that whole entire run. That's a whole other conversation. But we could get a nice little solid bump and run back to the downside. I was explaining this yesterday that we were making this move, and we could be just making the move just for us to fill right back up. There was a little bit of fair value gap. This was the old fair value gap, but there was a little bit of this fair value gap here that was left. We're trying to get back to it, and you can see that the bulls stepped in. We did not fill it completely. So look for this bad boy to try to curl right back up, putting pressure on the equities, and that could be our prelude to a kiss bye-bye of this upside, knowing that this jobs report is coming. That's why I'm so curious about this jobs report. There's so many little, it's like the interplay. Yeah, I don't know if y'all watch a lot of soccer or anything like that, um, but it's the game inside of the game, you know. Or let's use basketball. Like it's cool to kind of see the stats and the numbers and this, that, and third. But the real game is those in between games where, you know, let's just say there's a crossover, or, you know, the intricate passes, the things that you won't see in the stats that makes the game exciting and fun. That's how I kind of see the market. There's these little intricate things that's happening with the US dollar, the intricate things that's happening with British pound, the intricate things of gold, like gold's making its massive move. Those things are what you want to kind of like chart. That's why in BYTTT we kind of run through the gambit to kind of see if this puts some weight, it can put some pressure on other sectors or other indices, other areas of the market from international, because we are a global economy, and that could tell you a lot about the market. So let's go ahead and switch over to the news. So go ahead and pull out a pen and a pad, because the news is coming in hot. And this is the first day that we're going to be covering is our economic calendar. All right. So, so the challenge that we have here, got my eyes on 250 strike. All right, listen, I hear you, but let me get to this economic. I'm gonna explain what's going on my side of my community a little bit later. But this is what we're gonna be dealing with. So the jobless claims that we're experiencing is continuous jobless claims coming in with average week with initial jobless claim. These are the things that's going to be very critical. It's going to tell you a lot about the inflation factors and everything else. And you can kind of see NQ is struggling to hold that 600, and it could be profit taking while people are getting out the way because they know what could happen. It could be another thing that popped in my head as I was trying to like really understand where we could relatively go. Oh, actually, this is interesting. Looks like Meta has recovered something really nice. I'm gonna check that out in a little bit. Um, we could be also setting up where the market is going to finally test all those Asian and London overnight plays. We could be setting up where we're building an order block at these levels. Again, we got a nice little push right here that kind of gave us this propel here, and we couldn't hold it the first time. So anything above this level would be probably a little key. Come on, get there. And there we go. Could be key to kind of like hold us up. So much fun things that can happen with that information. Non-farm productivity is going to come in. It's a lightweight. I won't even care too much for it. But used car prices and month over month and year over year, that could tell you a lot of how the economy is spending their money. We're going to have some Fed speaking around 10 o'clock, so that's going to have some effect. Natural gas is going to be in there. 30-year bond. This is 1 o'clock is going to be probably the most critical point out of the market. I think I'm probably going to be done trading by 1 o'clock. I think it's going to be a lot of fumes as far as volume. There's not going to be anything really fueling the market around these levels. So just keep that in mind as well. Fed balance sheet is going to be one that we can see how far did they diversify their sales over at the Fed. So that way we can finally lower interest rate and take off the pressure. But with the market still rising up in these climates, they might not do it because it's doing its job. So that said, let's go ahead and crack open the news. And because I haven't actually gone and dissect this, I was going to save this for when I came into here with y'all. Let's see what news we're going to cover here. Let's go. If you don't have CNBC, I do suggest it. I like it. It serves a viable purpose. I do a little bit of the opposite because I do believe that they sell a lot of news to people, trying to get them to pivot their positions and get into certain things that they have no business getting into. All right. Let's see. Let's see. Residentials does need some help in that regard. I won't be surprised. As you know, the funny thing about residentials, I was looking at DR Horton. I think that's going to be a good one. Let's see what else we got. After Trump's chip tariff has brought exemptions. Okay, so I guess there's some details to some of the stuff that is on the tariff conversation. I like this one. Let's go with this one right here. All right. So it kind of goes back to what we were talking about before. Uh, Hold on. Kind of bloopered that one. Because what I was supposed to do is have it here. There we go. A look at gold charts and whether precious metal can add to its record-setting goals. Now, the reason why I find this very entertaining and fun is because if we go back to the gold chart, and I was just explaining this to you, right? We are trying to break out of that bullish move. Ooh, what a pullback. Look at that pullback. They are really trying to make sure gold doesn't get up there. Actually, let's look at pure price action. Actually, then let me get rid of ATR also, because this is just taking a lot of real estate here. Right? And if we really look at this, we got close to here and then they sell it off. Could it be they're exhausted? I don't think so. I think what's happening here, people are starting to realize that this wedge is here and they refuse to buy at expensive prices. They doubted it because again, 1, 2, 3, and 4 times we try to get out of this downward trend that started since April, right? We've been wedging as people went into equities the whole entire time. And could this be the move? Could this be the way that we finally break through? A close today will tell me a lot about this story. But again, I think most of the move that we could have been really taking off would have been that move as we broke through on the Asian session. But yeah, I think they can add. For them to add to their goal, they would have to go to that psychological 500 and hold, which would be right here in this level. But I like gold where it is, right? I like for gold to hold its position. Don't do anything reckless. You know, for my scalpers out there, you're probably going to go ahead and try to like reposition as we get closer to here. For my investors, you need to wait for today. You have to wait for today. Do not jump the gun. Yes, this looked like a breakout of the wedge, but candle completions are important to me, and it should be important to you. Are we standing on the shoulders of giants? I do believe so. I think there's a big giant order that came into here, somewhere around this ballpark. Let's go ahead and put this as bullish fair value gap. And I'm going to put in more of those, like, for example, this one here. Again, they filled some of these fair value gaps, but let's just say we stay on the bullish sides only. And then you got one that's over here. Again, this is very theoretical. I'm not saying this is how you want to chart this as a whole, but honestly, fair value gaps tells a lot of a story. That one there, only market off the bullish ones, right? And watch how they overlap. That's the goal behind this, right? And then this one right here. I could go probably further down because we probably came for this one here. That we'd feel actually, you know what? Just for sake of conversation, yeah, that's what I thought. I couldn't remember my chart because I've erased quite a bit. So what happened here when we did this fair value gap over here? We attempted to come here, and that's what started the wedge. The bears like bear side, and they keep on shorting it, and they're like, no, bull side. You know, going with my Remember the Titans montage, and bear side, bull side, bear side, bull side, bear side, bear side. Get that confirmation. Let that happen. That means everybody that accumulated at each and one of these fair value gaps, this whole entire thing could be cascaded. How I like to like measure this. Now, a lot of people like to measure for the pole on wedges, but I like to know who are my recent traders that steps in. So I like to look at it like this more than for this and this. So I'm thinking something along the lines of that with a 50%. Again, we do not take all of it. We're not greedy. All right. 50% of the mark means we'll probably get to 36.21. Put it on the board. And then my investors will probably pile in with the daily doing its job. And for my traders, be excited for a possibility of testing that 500. Again, there's nothing here. I'm not a fiduciary. I'm not a financial advisor. I am not saying that gold is going to be 621. But I will tell you this. As a guy that just loves looking at charts, it looks very tempting. And assuming that this wedge plays out, we're going to get that move and explosion. And then we're probably going to get the pole, which would be this pole move right here. And 50% of that pole from the breakout to the point would look like 883. So $4,000 gold, very possible. Is it probable? No, I got a lot of questions on these daily candles. Look how tiny the candles are right now. That's a major move if you really think about it. But right now, we're getting the first stages of that sign. I close above here, close above here. Got to take out these stop loss because these are places where all the sell side liquidity is. So I like that news that is stating here. A look at gold charts and whether precious metal can add to its record-setting gains. It's possible from a technical standpoint. From an oscillator standpoint, I don't like it. I do think that there's going to be a bearish divergence that's going to form. If we go over to the weekly, this is how we're looking. Stochastic did reset, but this MACD did not get a chance to. It makes me think like the weekly is holding up gold. So I do feel like whatever next move we make, it's probably going to have a very violent pullback. If you don't believe me, let's go over to the monthly and you'll see something that just gives a little concern as well. I'm going to go ahead and hide these drawings. That's our wedge, which is logically, we've just been up and down, up and down, up and down inside of each month. And we don't have not one powerful candle. Does August become that powerful candle? If this thing starts to revert all the way back down and don't hold no levels, just be prepared for that. He's like, yes, you can, Linda. Yeah, and just be cautious that this area can be retested at any point, which then will take all the recent buyers out, and that means there's less investors and more traders, at least in my eyes, and that could probably bring us down a little bit lower. So I love this article. So let's go see. Let's see what else we got in the news. We're gonna give you one more. Oh, really? Are they really going to do that? I love when analysts puts price upgrades because it's like, yeah, I get it. And I know you probably put in targets and probably doing the same thing that I'm doing. And you probably got an extension here. But when I start to hear upgrades, I put a lot of doubt to that. Like, yeah, you're just being a little biased for whatever thesis that you have. I like to go with the consensus. So I want to see the charts. Let's go. Let's go with stocks and buyback. Let's see what this is talking about. Let's copy this one and then we'll bring it all up here. Stock market secret sauce. Buybacks are on pace for a record 2025. So I guess I have a question to this, right? Because there has been some stocks that's been doing some buybacks, and that can make things very interesting. If you don't know what buybacks are, that's how shares are starting to go back up, because whenever you give a stock out, that stock is you lending money to that company in hopes that they will appreciate in valuation, and then you get your profits in between that. Shout out to Warren Buffett for giving 5,000%, not 5 million, 5,000% on his Berkshire Hathaway A. Like that's like epic in itself. Um, but I would say when you get these buybacks, they're supposed to be where they're taking some of that lending and giving back the money back to their shares, so that way they can have a little bit more control. When you hear someone is offering or stock splits to offer more, that means they're asking for more cash to borrow in that regard. So you got to kind of look at it with a grain of salt. So when you hear buyback, that means they have enough cash on their cash flow for them to buy the stocks back that are shares that's floated, and then they can reduce the available shares floated, and it's almost like reinvested inside of the company. What that does is like it squeezes the availability, which artificially, if you really think about it, puts the market in a higher demand, but it's the company buying its own shares. But again, if I'm doing everything right, then yes, I would love to reinvest into myself. And that's how I look at it. They're thinking that it's going to be somewhere $165 billion. Like, that's a lot of money. I wonder if they have any tickers that is considering some buybacks. Looks like we don't. I would love to know who is thinking about buybacks, but I would say the strongest companies that are with good EPS, the ones that are growing in revenue, the ones that are not the growth companies, because growth companies, they're going to always need that cash flow cash. So always look at your Coca-Colas and everything else. And the video doing a stock buyback will tell you a lot because they've done multiple splits. Actually, let's look at the video. Let's go that route. If you don't know about NVIDIA, it has done multiple splits. Right now, they have 23 billion, that's with a B, shares floated, to kind of give you a little bit of a sense to that. And being that they're at 23 billion shares floated, it kind of just tells you a little bit of what it is that they're working on, right? It's right in this area right here. And 23 billion is very high. Give you a little perspective. McDonald's, it's a dividend play, right? It's no longer a growth company. It just does its stuff. And if you really think about it, they're a real estate company when it's all said and done. Now, of course, different sectors has different results, but you can see they have 714 million shares floated. And then you got somebody like Intel, which is in the same semiconductor space. And we've talked about this one, and I always laugh at them because they can't get out of their own way. And guess what? They have shares floated. They have 4.37 billion shares floated. And when you get those stock buybacks, it then reduces that, so that way they can go ahead and appreciate the value and give value back to their shareholders from an appreciation standpoint. And the best part about it, now their debt is lowered, because whenever they give stocks out, it actually adds to the debt. So very interesting to see how all these profits gets deployed going into 2026. I will not be surprised that there'll be a major pullback, because we are now on year 2 of the bull run. If you really think about it, we're in the tail end of year 2. August is that, and we're probably going to go ahead and get a nice little pull. So let me go ahead and run through earnings really fast on what we have going on. I'm going to speed through it only because we got 8:30, and I want to be able to kind of break down some of the stuff that's going to be in the charts. All right, so what do we have for our earnings cycle? We have ourselves today. Lilly was this morning. I did see a little flash that came through. I guess they did okay, but it's still coming down because, again, this is a company that looks like it is exhausted for its upside. So we're probably going to go ahead and get some downside there. Let's see. That's Lilly. We have Crocs this morning. I still don't understand why they exist overall. Oh, I should have took some Croc puts. Oh, Lord. this was one that I was eyeballing that I was going to go ahead and short the crap out of them. I do not like Crocs. If you don't know that, you haven't watched this show enough. But yeah, this thing does deserve to come down to these levels. I'm really curious on what their earnings looks like. We'll see what happens there. What else do we have in the earnings pipeline? Tonight, we're going to have Gilead. This is in the science space. Will Gilead save... Oops. G-L-I-D. Will Gilead... Really? I lied. Thank you, Gilead. Will Gilead save Eli Lilly by showing some support from whatever it is that they have in their pipeline that they're probably going to announce during their earnings? Maybe. Maybe. Because the healthcare sector has been pushing relatively well. But this is a nice little pullback over here. So I'm curious, can they get back to its stride where they get above this level here? I would say maybe. But you could kind of see we already started our pullback since July. But I was thinking we could get ourselves a nice base. So we had the nice little push in May. We had spiked up here. This is where Johnson & Johnson really started taking off. We almost took some highs, got into the gap. But then, you know, August is doing this. And it's putting some pressure. So I'm very curious on what's going on with the healthcare sector. This could be just a pullback, knowing that sector rotation kicks in roughly around November. But looking at Gilead, and it's trying to hold its weight here. Maybe they're holding it to put more. So just kind of keep that in mind as the day pans out. All right, it's 8:28, so let's go ahead and speed out to the next three. We got XYZ, aka Square, aka Block. I'm very curious about this one because I think they're a well-ran company for the most part. It's just they just can't get out their own way in some aspects as far as future growth. This is Take-Two Entertainment. I explained this yesterday. They're going to release their new 2K, so that's going to be fun. I am in line for getting my copy. If you don't know, I love my basketball. Live Nation, this is what it looks like. No trades right now, but this one has a couple of question marks, and that is the earnings that I want to kind of look at, and I'll talk about tomorrow's earnings, which is only one after we kind of see what's going on here with the market. All right, so we got less than 30 seconds until this jobs report drops. Let's go ahead and bring our lines in, and let's go ahead and drop down to 15 minutes so we can see it in a granular view. We came back to that 600 again. This thing was trying to get under. We got as low as 75, 77-ish, and we just pushed right back up. We got bearish divergence on this 15-minute. Let's see what happens. And here's the news. All right, so they went bearish for a little bit first. Nice little spike through. Probably grab some liquidity. Maybe knocking out some of the bulls. Let's see if the bulls step back in after getting punched in the face. Okay. Looking all right so far. We might get some more. Might get some more upside. Let's go ahead and grab the news and see what it is that is going on over there. And mixed bag. That is a mixed bag for the most part. That is not telling me anything. We got bullish for the dollar for the average 4 weeks. But we got bearish for the dollar on 2 key points. The jobless claims for the week, and then the initiating of jobless claims has showed signs of relative job weakness. So job weakness is bearish for the dollar. So market kind of rallies, and that is exactly what's happening here. We spiked through the 600, and it looks like we're going into like 610, 620. So it looks like the bulls are starting to punch back after getting jabbed in the face. Let's see if we can get back up in here to this level here. That would then tell us what's going on. And what I'm going to do is get into the be right back mode, and then I'll come and give you some more commentary. Give me a bit. All right, let's get back to it. Yeah, it's. Nah, I wouldn't. Not yet. I would probably just wait for the New York session. I think overall, this is exactly what you was looking for. Let's see how this impacted gold in that same regard. Oh, now she calls me back. All right, give me 1 second. Yeah, so gold looks very interesting here because I had a feeling that this could have happened. Um, because what ends up happening with bearish for the dollar is usually bullish for the gold. And we got a nice little crossover here, and this looked like it could give us a nice little continuation. And since we did not get all the way to that level, let's come up to the daily a little bit. We're almost there, right? So maybe that was going to be that catalyst to kind of drive us there. And that's what it looks like right now. Let me go ahead and get rid of this. I'm trying to see if we can find a nice little scalp here, but I don't see anything that I want to relatively take. Maybe if I actually looked over at gold for this move. No, not really. We did liquidate some bears on NQ. Gold wants to try to keep on pushing. We could probably come back to 3,458 again. Maybe 3,460. That could be another one. And then push up again for the most recent bears that stepped in. But everything just looks heated because, again, I think the real play was during the Asian session. So that said, I think we covered quite a bit of stuff. Let's talk about the last earnings, which is tomorrow. We have, where are you? Under Armour. Now, why I left this one for last was because I have a nice little soft spot for Under Armour. This was one of the first ones I started learning how to trade with when I got into trading back during the pandemic, as far as options trading, because I always did stocks around 2008, but never really understood the whole purpose of options and never did the research. The pandemic opened the doorways because I was doing nothing and I tried to stay productive. I think a lot of people got into trading because of that. But Under Armour, I was like, oh, well, they got Steph Curry and this, that, third. They were going to be the competitors, Nike, whole lot of stuff. And you can kind of see that is not come to fruition, right? They don't return money to shareholders for obvious reasons. They just do not have the market cap like that, right? They do bring in a $1 billion revenue, so maybe if they could cut back some places. How do you drive people that are loyal Nike? You know, you see Reebok fell off the brick, right? They got destroyed, and you can't find those shoes almost anywhere, right? So it's like seeing Under Armour where it is right now, and they were known for their undergarment gear and their compression sleeves and all that stuff. But not, compression sleeve is not something that is moldable. And if you don't know what I mean by that, is like you can't create a mold to patent that. It's just literally a style of clothing at this point. Shout out to Lululemon, who that's what I'm having a conversation with friends about. So looking into that regard, I don't see how Under Armour really gets out of the pits that is down here. Like, what do they bring to the table that can go ahead and push them up? I think this earnings cycle is just another prelude to another kiss goodbye. This thing is probably going to be destined to the OTC if they are not careful. So we'll see how that pans out. Very important thing for you to understand. Fridays are usually very, very quiet when it comes down to earnings. So this is a major reason why there's only one left. So if there's any warning that I will have for y'all, tomorrow, based on the price action that's been happening, just be very, very careful on taking your trades as we wrap up BYTTT live session with the jobs report, because I think a lot of y'all traders are going to try to play during the daytime. Come to Get Rich or Fit Trying tomorrow, and I'll explain it a little bit further, and we could have more of a hands-on. Take a trade that is going to be solid on that first opening part of the market, and then we could kind of like push back over to just relaxing, enjoying our Friday, and enjoying a good partially 3-day weekend, right? So that said, I want to say thank you very much for participating with BYTTT. Go ahead and hit the like, subscribe, and the bell button. I am super close on getting to my goal of 500 subscribers. So go ahead and share it to your friends and family. If I bring you good information, if I really do terrible, by all means, go ahead, send a comment, say, hey, JD, I know you're trying your best, but this is terrible. That's okay too. I'll take it. There's no problem. But I like constructive criticism. Let me know what I can do better. And don't forget, the links are down below if you want to be a funded trader. I'm going to actually, what I probably do when I bring my one-on-ones back, I'm going to bring my one-on-ones together with Get Funded. It was a good program where I was helping people to get funded in their portfolio. So we'll try to knock that part out. So I want to say thank you for everything that y'all have done and helping me get to my milestone. So until we see tomorrow, you have a great day.